21st February 2023, Tuesday. Alright guys, I am not feeling very well today, so you will notice my voice is very low because I'm having a bit of heatiness in the body and I can't really speak that clearly. So if you feel I'm mumbling, I really apologize on that. Now, Russia and China are very upset with the Biden sudden visit to Ukraine, and of course now Japan has come in with a $5.5 billion aid. Things is getting a bit crazy, and I think that probably something terrible might happen. So traders, you need to be very, very careful because this is no joke. Alright, so of course main thing is that do your risk assessment, and thank you Amos for the kind sponsorship. Alright, now the thing is this, what happened recently, because I was having my class, my PTP class, my Pro Trader program. It was a very good class. The class was amazing. They were nice, they were cool, and very important, we have a great time together. And of course, the food was also amazing. Look at it. Oh my goodness, okay? So this is what you get when you join TWB. Not only you get very quality technical knowledge, you also get very good quality food itself. Alright, so what's happening again at this Biden side? Apparently, Biden did a really sudden secret trip to Ukraine, and that sent messages to both China and Russia. And of course, it was really a secretive journey. So things is getting a bit crazy right now because it's like the 1-year anniversary of the Russia going into Ukraine. And of course, Donald Trump defended Putin. My goodness, okay, things is really getting very interesting here. And of course, on the surface, it seems that Biden is just joining Zelensky to, what they call do your respect for the War of Remembrance at the St. Michael Golden Dome Monastery. But we all know that this is more than meets the eye, because at the same time, we all know that they've been saying that this trip have been in the works for months. And of course, to our president of the world in a way, going to Ukraine right now is really very dangerous, isn't it? But seemingly nothing have happened. And of course, based on what we're seeing around in the Pentagon, there were many rounds of talks between the top officials before Biden decided to go for this trip. And the thing is this, you can see right now that this President Putin is very upset, and of course this is not going to be good. And basically it is a way to demonstrate to Russia that US and Western support will not wane, and that again may actually cause Putin to do something more. And of course we expect that, who knows, he may want to cut down further crude oil, because the last time he said that, immediately Biden and his White House came in and increased the supply in the market by taking on their reserve, right? So question comes in is that Biden also pledged $500 million in additional military support again. So that again is almost directly telling that let's go into this war, but I don't want to participate. Alright, this is really not a very good sign. So the Chinese state consulate and the top diplomat Wang Yi actually flew to Russia to visit Moscow, because definitely that when US take the side of Ukraine, so obviously China is very close buddy with Russia, they will have to take their position too. So this is like a very public warning to China indeed, and of course it's not going to make things happy. And of course recently when China flew the so-called weather balloon, aka spy balloon, that also caused a bit of rift right now. And the thing is this, okay, and when the Chinese diplomat was being asked about the current, whatever happened right now, could it be an escalation to Taiwan? Apparently, Wang Yi came in and said this: let me assure the audience that Taiwan is part of Chinese territory. It has never been a country, and will never be a country in the future. Wow, that's a very, very strong position. Now, why this statement? Because NATO Secretary General Jens asked, what is happening in Europe today could happen in Asia tomorrow. And that's what they're trying to say, because Russia thinks that Ukraine is part of them. So they are forcefully wanting Ukraine back. So of course, you understand how it leads right now for the China-Taiwan thingy, right? And that's what's happening right now. So of course, Japan at the same time came in and promises to lead the world in a fight of Russia aggression with a $5.5 billion aid. Oh my God. I mean, Japan itself is not doing that fantastic well, right? And now they're going to bring in more money. So probably that's the reason why they have been selling some of their bonds recently. So maybe that's one reason. And of course, now there are ongoing rumors saying that China may arm Russia, and of course now Beijing is definitely pissed, and it's going everywhere. Okay, it's going everywhere right now. So again, you have your Russia, you have your US, you have your China, you have your Japan. Guys, this is really, really very scary. Okay, because all these are top countries, and of course if they can settle this, probably good. That's good, but if they can't, then things can get very, very volatile for those involved in the stock market. Alright, so at the same time, CEO in US is cutting their pay as they are pretty uncertain with the current economic condition right now. And of course, Mike Wilson over the weekend came out a very interesting article. He actually used the mountain climbing of Mount Everest as a front, and he says that when the 12 mountaineers died because they went all the way to the peak of the earth, they know that oxygen was pretty thin, and he's trying to say that the volume now, the liquidity now is really, really low. So which means that if anything happened, there could be a very critical momentum towards the downside. And the thing is this, he actually mentioned that the current PE value now is really, really still high. So the PE at the moment is 18.6, so it's still got a bit of room for further downside. So by doing that itself, right, this so-called liquidity low environment could actually cause a downdraft in the market, according to Mike Wilson. And of course, bottom line, he says that, right, the bear market rally has begun in October, and now it's time to take profit, and of course there could be further selling. In fact, the main reason is now that the China reopening and a weaker dollar is one of the main concerns, and of course we all know that the global M2 has increased by a staggering $6 trillion, providing the oxygen to investors to survive in the death zone. But if the supply, which is now getting lesser and lesser, of course the so-called climbers or investors in this case will be having trouble, and of course things is going to go, it's going to win, it's going to basically, in his view, it's going to be running out. So that is from Morgan Stanley. Alright, but JPMorgan Strategies also says that the stock rally will fade. Alright, very interesting. Now JPMorgan was more bullish than bearish over the last year, but now apparently they changed position. Historically, equity do not typically bottom before the Fed is advanced with cutting, and we never saw a low before the Fed has ever stopped hiking. That means that you don't see a low yet until the Federal Reserve really stop hiking. That's what I'm trying to say. So that means that the damage has been done and the fall is still ahead of us. And who is this guy? Mislav. Right, he says that the first quarter is likely to mark the highest point for stock this year, which turned cautious on the outlook for the stock towards the end of the year of last year, after being very positive for 2022. So his team expect the rally to fade, and key monetary indicators such as a heavily inverted yield curve and money supply moving lower in both Euro and US, which is totally true. So now we have people from Morgan Stanley and now JP Morgan. So what do you think, guys? Do you think the market is ready to bottom out, or you think that the market is going to sell off? So there will be major retailer report earning today, this week itself, and most of them, like big one like Walmart and Home Depot, will definitely be the ones to be watching out. And we do expect the earnings to drop. Okay, we do expect it to drop, and it could actually be a third consecutive quarter in the EPS, and that's not a good sign. So this week there will be a lot of these retail companies coming out, and we can see that although 69% of the companies have already exceeded EPS, but you must understand this EPS number is below the 5-year average. Okay, that means that they actually mark down so that this company can so-called exceed expectation. So it's just like if you have been your test result itself, right, is always about 65. All right, So in order to make you feel happy, I tell you that as long as I lower down for you, that instead of aiming for the 90, I tell you if you hit 55, it'll be excellent. And of course, when you hit 65 again, you're above the expectation. That's what I'm trying to say. So this is not a real and right way, right? Because we all know that retailers could face a cost cut due to the slower sale this year. It's very clear when interest rates is rising, earnings is not really able to combat inflation, and of course when you have been borrowing money where credit is at the highest and saving at the lowest, this is not a good sign. So we can see that today before market open, Walmart will come out their result, then Baidu will be on also before market, then of course Alibaba on Thursday. So there's going to be big companies, and I feel that these retailers won't be doing that well. Okay, I don't think so at all. And in fact, this coming Friday, the Bureau of Economic Analysis (BEA) will release the Personal Consumption Expenditure, which is a PCE. PCE is a preferred gauge of inflation for the Federal Reserve. So the market is actually looking at a 4.8, okay, slightly lower than the 5% in December. But based on what we saw on the CPI data and the PPI data, I just feel that this is not going to be at 4.8. If anything goes higher than 4.8, like 4.9 or 5.0 or retain 5.0, the market won't like it. Alright, so traders, you need to be very careful on this coming Friday. So Goldman Sachs now, right, apparently they were a little bit telling people that, okay, you know what, there'll be more rate hikes coming in, but I don't see recession. So it's a very interesting view right here. So I'm going to bring it to you right now by Goldman Sachs being interviewed by Bloomberg, and let's hear what they share with the host. Let's go.
Talk us through what drove that adjustment that you made.
So our expectation for growth is stronger than for many other forecasters. We see a lower probability of recession than the consensus. We see about 25% probability over the next 12 months, growth in the 1.5% range. And the recent numbers have been even stronger than expected on the growth side. Plus, we've seen some higher inflation numbers for January. I don't necessarily think that breaks the trend towards disinflation, but I think it reinforces the idea that the Fed still has work to do. And so we think another 75 basis points from here with no cuts until 2024 seemed like a more likely outcome, and so we made that adjustment.
Mm-hmm.
Okay, so Goldman Sachs really expect more rate hikes coming in, and they expect 75 basis points. So it's exactly something I say. I believe that we will see the 6% mark. Alright, if of course by the time we hit 6%, I expect the stock market to be down by at least another 10% from where we are right now. I'll cover that very, very shortly, and that's from Goldman Sachs. So of course now the thing is this, the market is still pretty confident that they will see a 25 basis point on the coming meeting on the 22nd of March, which is about 1 month from now, and about 80% thinks that it's going to be that. But there's a 19% thing that will be a 50 basis point. Now do note, just last week, okay, before all the data come up, the chance of a 50 basis point was less than 3%. So that's 19 right now. I believe that this number will shoot up. In fact, itself, right, I think by later on this week, this number will hit at least to 60%. Which means that there will be a very high chance that the market will actually think that, right, it is better to have a 50 basis point. If not, inflation cannot come down. That's my personal view over here. And of course, if you look at the screen right now, you can see that this is the interest rate since 1970 until now. And almost every time when you have interest rate that is above 5 to 6%, we definitely will have a recession coming in. So every time when we see that, recession will be near the corner. So now, if you ask me, right, we are now at this level here. It's going to be pretty easy to see 6% by the end of the year. And if that all happen, definitely the big R will be just next door. In fact, I'll write this again. I believe that by August 2023, we should see the word recession right in front of us. Okay, this is my personal view. And of course, I see whether whatever I say will eventually come true. Because, of course, it's like, I mean, no one wants a bad market condition, but of course, we have to be realistic. If you want inflation to go down, then I'm so sorry, you really need to increase costs on people so that they can stop borrowing and they can also work towards repayment. Because if they keep on expanding, then the things will get very ugly. And if you keep on doing that itself, right, if no one want to get out from this rat race, then of course the thing will get even crazier. Like nowadays, you can see that the food prices in Singapore is getting ridiculous. I heard that rental is up by another 20 to 30% right now. It's a very, very big jump, and people can't take it. This is not going to be good. So you look at the S&P 500 chart right now, right, you can see pretty clear that this is the point A, point B, point C, point D. All right, now what is happening here? You can see that when point C, the market went above the 150-day moving average, and then the RSI get to the highest point, so it becomes a sell signal. So once the market loses the MA, that's where the market really came off. All right. So where are we right now? Now we're at D, which is D is lower than C, and that actually tells you that the market trend is on the downside. The common point confirms it. So now the thing is this, with the current situation right now, right, every time when the market comes down, some artificial hand is pushing it up. It's very clear. So all I can say is this, do expect some movement until we reach here itself for the S&P 500 at 39.50, because that will be the first support of the MA 150 then. But if the market loses, okay, if it loses like what you see over here, the 150-day moving average selling will come. And you can see every time when the market goes below the moving average for the first time, you notice that every time there will be a small little rebound first before the market really come off. So what do you think, guys? What do you think? I think that 39.50 is coming in, and for Michael Harnett, he's also pretty confident that this is going to come. So, but with all this thing ongoing right now, the fear and greed index is still staying at the greed level. 1 week ago at greed level, and 1 month ago is still at greed level. Wow, this is really amazing. So let's just take a look. Why is the market so resilient? Let's take a look right here. Now, first of all, you can see that this is CNN Business Fear and Greed Index. And you can see that I have been telling you guys this, there is a good chance that the S&P 500 had to go back down to 3,900, because now we are considered like off the average itself. And of course, you can see the stock price strength is still very strong, because some of the selected counters itself is pumped up all the way. The stock price breadth is coming down. That actually tells you that, you know, traders are booking profit along the way. So the extreme greed part on the put and call is because the current situation shows that a lot of people are still buying a lot of call, and the put itself, right, only recently got some interest. If not, previously itself, right, a lot of people got flushed out by this. When the market was going up, the put option all went expired. All right, then of course the market volatility, we are very near to a so-called breakout. So with what I'm seeing right now, right, it is very possible to see a very big movement coming in on the US market. And if this one you get it correct, you can make a lot of money. If you're wrong, you can lose a lot of money. Now the safe haven demand, which is the 20-day stock and bond return, it has pulled back from the high. So basically that means that the equity traders are not very keen at the moment right now. And last but not least, the junk bond demand has basically was up earlier, but now you realize that things are good, people are just dumping it back again. But by staying at 2% itself, it's not a good sign. So traders, again, you need to be very careful. Okay, all right, so that will be all for the fundamental news, and thank you for listening. We'll go into the technical shortly. This is Cal signing off. Bye bye.